Alright guys, we are back with our second educational video for TA, Technical Analysis. Today, um, okay, I hope my fan isn't making noise, but I'm fucking sweating my ass off. Um, Today's video is about fib retracements and liquidity, and how to use that together, and also with that, with learning the fib tool, you'll learn a good RR and good win rate trading strategy that I use in tandem with other tools for probably 90% of my trades. So let's get right into it. But first, if you did not watch the last video on market structure, go back, watch it a fucking 1,000,000,000 times until the concepts are burned into your brain and until you understand it good. And take fucking notes on it. Take notes because they're important and it'll help you a lot. So yeah, let's get right into it. Okay. So we're on the Bitcoin chart. We're in July or June 2021. This is just for example's sake. I mean, obviously, but let's first go over what liquidity is. So liquidity is cash. It's cash flow. And when you have orders or when you have a market like this, it's based off of supply and demand. You need if you want to buy something, you need somebody that's selling. And if you want to sell something, you need somebody that's buying. And with futures trading, it usually looks something like this. You have an entry. Let's say this is an entry. And then you have a target price. Let's say you're in a long position. You'd have your target price above your entry. And then you have a stop loss. Should be down here. So you get in your trade and you're hoping to hit your target price. This example is for long, by the way. And you're hoping it doesn't hit your stop loss. The stop loss is what's going to get you out of the trade so you don't lose a shit ton of money. This is your risk management. So when there's a liquidity grab, a bullish liquidity grab, it basically means that the market maker wants to push the market up, but it doesn't have enough capital to do so at the current time. So basically what will happen is the market will dip down below a lot of common stop losses to grab their cash, because once this stop loss gets hit, you lose that money. And if there's a bunch of stop losses in the same place, let's say there's 1,000 people that took this exact trade, when this stop loss gets hit, that is 1,000 people's money that is now liquid cash. So, and then the market makers will fill all those orders down here and then use that to push the market back up. So basically, you can use that to your advantage using fibs. So this is what a liquidity grab would look like on an actual chart. This is an example of a liquidity grab. As you can see, it was trading in this kind of range right here. And then there was a liquidity grab to the downside. And then another liquidity grab here, which helped push the market up after that. And the same concept also applies inversely. So where's an example of a bullish liquidity grab or a bearish liquidity grab? I mean, these are small ones, but that's a liquidity grab that pushed the market down. And you can also see this doesn't always work. Big liquidity grab to the downside, and then the market kept going down. So yeah, but this would be a liquidity grab, a bearish liquidity grab. This would be a bearish liquidity grab. This would be a bearish liquidity grab. You kind of learn how to spot them the more you are in the markets. Bearish liquidity grab, bullish liquidity grab, bearish, bullish. And I know it's weird because it's opposite. A bearish liquidity grab is the top, and a bullish liquidity grab is the bottom. But yeah, I'm going to do a lot of examples in this video, so you guys will get the concepts down. But let's just start with this one. You see a liquidity grab right here, and then what you'd want to do is you grab a fib retracement, and you'd want to drag it from the local low to the local high, which, boom, you guys can see right there. And then what you'd want to do is, I mean, for this example, I'd probably use this liquidity grab because it was a bigger one. And then what I would do is you'd want to set your stop loss. So first, let's go over my fib settings. A Fibonacci or a fib retracement is basically a tool that shows you levels. and those levels are based off of where you put each point. So if you're doing a bullish fib, you'd start from the local low to the local high, and then it gives you all these levels, which I will show you right now. These are my settings for fibs. You don't have to use the 0 or the 1. The 0 is basically the top point that you set. So you can turn that off. It doesn't really matter, but I turn it on sometimes just for visibility. And then the 1 is the same thing, but just on the first point you set. Um, so, but the really important levels are the 0.5, the 0.618, the 0.382, the 0.786, and the 0.66. So these are all the levels that are shown by the fib. And then in between 618 and the 66, this is what I like to call the golden pocket. And also keep in mind that market makers do use fibs when determining market conditions. But so what you could do, and what I would do as a good trading strategy, is when you see a liquidity grab like this, you want to set a stop loss. You don't want to just get into the trade immediately, but you set, let's say, I'm watching this live and I see this liquidity grab, and then it goes back to the upside, and then it starts ranging a little bit. Right as I would see this top, I would put the fib from the low to the high right here, just like I did, and then I would wait for it to hit back into the golden pocket. So here would be a good chance, as you can see it wick back into the golden pocket, as well as here, 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 here. There's a lot of chances with this one. And then you could also, if you wanted to, take this entry, which would be pretty fucking sick, but that's not really, that's just for this situation. I mean, in general, you want to take a golden pocket entry because that's just what you want. And then what the general rule of thumb is, put your stop loss under this liquidity grab. So if you were to get in, you'd want to get in within the 618 and the 66 with a stop loss below the liquidity. Or if you want a smaller risk profile, you could do the 786, but as you can see with this example, that doesn't always work. So you get in at the golden pocket with a stop loss down below this liquidity. This blue line would be your stop loss. And then you can set your first target price either, this is why I use the 0 and the 1 sometimes. You could set your first target price at the 0, or you could set it at the 382. And then what I usually do for fib trading is I have one target price for half my position, or just so I don't lose money, at the 382 or the 0, and then I let the rest ride. So if you got in this trade right here with the liquidity grab here, and then you let the rest ride, I would even, looking back, I would put this as my target price and obviously adjust. But look, if you got in on the golden pocket right there, um, let's just say you got in on this wick right here, right in the middle of the golden pocket, and you had your stop loss here, and then you put your target price at this high before. That is a 5.7 risk to reward ratio. So you're risking 5 times less than you would make off that. And then obviously this trade did hit and you wouldn't have hit your stop loss. So yeah, that's an example of how useful these can be. And I mean, look at the RR on that. And even if you did have a risk to reward ratio, I need to turn my magnet off, sorry. Even if you did have a risk to reward ratio here, or here would be not that good. If you were going to have your target price at the 0 here, then you'd want to have your stop loss at the 786. That would be a 5.76 RR, even though that wouldn't have worked for this setup. So that's why generally I like to have my stop loss below the liquidity, because that just allows for longer trades. And then I would put it back at the high up here. But yeah, this would have been a fucking insane trade, and it would have only taken. I mean, this is on the daily chart, so it would have taken a couple weeks. Um, yeah, it would have taken a couple months actually, but you can do this on lower time frames too. Generally, I would do this on the hour, 2 hour. I do like to do it on the daily just because I'm more of a long-term trader, but you can do this on pretty much any time frame. I would just not recommend it on the minute unless you have market structure fucking down to a T, and you know the respected supports and resistance on those lower time frames that you got from higher time frames. So let's move down to the hour, or we'll go to the 4 hour, and we'll find another example. Okay. So here is a more recent example. You have, yeah, okay, perfect. You have a liquidity grab right here. You could even say it's right here. Liquidity grab. So you put the fib from local low to the, I mean, even here would be a local high, I guess. And then, I mean, yeah, this one's a little trickier. Yeah, I'm sorry guys. This is all one take and unedited, so you guys are gonna have to bear with me for my retarded moments, my little brain farts like this. But yeah, you could see this fib if you did set here we'll add the one back into the equation too. If you did put if you did get in this trade, put the liquidity grab here, local low to the local high. This is obviously a long setup. It traces back into the golden pocket here. You um, get in right here, middle of the golden pocket, and then you'd set your stop loss right below this liquidity. The liquidity grab is here, so we'd set our stop loss. It can be a little bit below, it could be a little bit higher, and then take profit next to that old high. You could do the 0 too, but like I said before, if you're doing the 0, then you'd want to have your stop loss at either the 1, so this would be a 1.83, or at the 786. But I mean, if you did get in at the end of this wick after it had already gone back down and was retraced into the golden pocket, that's a 4.4 RR, and that would have hit. But for my example's sake, we're gonna keep using the under liquidity and old high strat, which still would have hit right here. This is a 2, or basically 2 RR, but also a lot bigger of a trade. So I mean, that would have hit beautifully in, this is a 4 hour chart, so would have been like a day and a half on that trade. Would have hit beautifully. So yeah, that's just another example of how you can use fibs and liquidity together. Now let's take a look at a bearish example. So let me just find one. Alrighty. Okay, yeah, found one. So we have a liquidity grab here. This is a bearish liquidity grab, so we take our fib from, now this is a bearish example. We take it from the local high to the local low, and then we would use the golden pocket. So we'd enter right here in our short position, and we would want to set our stop loss just above that liquidity right there, and then we'd want to set our take profit. I would say you could use this level, but I would probably use this based off the market structure video I did, because this is probably a pretty good support. So we pretty much already have our take profit right there, but this is a 2 RR trade, and it would have hit too. Yeah, see if it would have hit right there. That is another beautiful trade. Yeah, it works both ways, guys. And this is such a good beginner method. You can use it just with fibs, but you can also add other confluences in it, like market structure, which is how I would have gotten that target price right there. But yeah, you can do some pretty good things with this. I also would say that because this strategy is so well tested and just so commonly used, that the market makers use these to push the market. So when there's setups like this, it usually means it's because of a fib. When there's big liquidity grabs like that, upside and downside. it's usually because the market makers are looking at the fibs too. So let's go over another example for a bearish fib retracement move. What would another example be? Okay. Yeah, this one would work. So we have liquidity grab high and then local low. We have, see, I mean, you can even see here. One, it used the 0 as a support, which is also market structure, as well as a resistance, resistance, resistance. And then you can see, look, it traces back into the golden pocket almost perfectly. So this fib trade actually had many entries. There is an entry right here where it barely wicked in. You could have taken that for have the stop loss right above the liquidity, or honestly, what I would do is probably put it above this liquidity grab, but that would be a little high, so I would keep it here because I'm not trying to risk that much. And then target price probably, I mean, that would be a pretty hard one, but that would be a great target price, which it would have hit too. Like if you use that liquidity as a target price, that's a 3.4, and that's a fucking huge trade. And it gave so many entries on this trade too, because you can see it's in the golden pocket here. So look, you could have taken it right here, um, taken it right here, and that would have hit down there. You could have taken it anywhere in here. Could have taken it here even. Look how close that is to the stop loss. Doesn't hit, and hits down here. So yeah, and that's a 3.17 RR. So I mean, you guys can see this strategy does work, and this is just on the Bitcoin chart in the last like fucking couple months. But yeah, these setups do work, and they also are very forgiving. They do give a lot of chances. One entry, and then a shit ton of entries when it consolidated around this price point, and then went back down to close orders. You could have taken this same trade 3 times. One, two, 3, and you could have made almost the same gains every time. These two trades, you could have made the same gains, and then this one, you would have had to have a little more conservative target price. But yeah, and then also if you did let it ride, you could have gotten all the way down here, which would be nuts. But yeah, that's just another bearish example. And then even here, another bearish example, liquidity grab right there, take the fib, local high to the local low, and we have a golden pocket entry right here. We could have even had our stop loss at the 1, um, which would have been a little easier to hit, but that would have also kept the RR insane. So let's just show that one real quick. Stop loss at the 1. I would probably keep it above the liquidity because that's what I normally do. So yeah, and then that would probably be take profit 1 for me. This would be take profit 2, and then I'd let the rest ride. And if you did let it ride, you get all the way down to here, 7.14 RR on this trade. It just works, guys. This stuff just works. And it's not only on Bitcoin too. This let's go to Sol for example. We'll clear out this chart. I was even using a fib last night in that trade I missed out live because or I mean I missed it because I had to go live. So look, let's even look right here. We have liquidity grab. This is happening right now basically. Liquidity grab, local low to the local high. We are in the golden pocket as we speak. I'm probably going to take this trade stop loss. I'm actually definitely going to take this trade. Um yeah, I'm going live right after this video and I'm going to fucking take this trade. Um and I'm going to enter hopefully right here if it chills here. I'm going to have my stop loss down here, 194. And I'm going to have my target price 1 here, and then target price 2 right here using the levels, the support and resistance levels. And then my target price 3 Oh fuck, I just cleared my chart. But target price 3 for me is going to be 245. So this is going to be a 5 RR trade, or 4.99 risk to reward ratio. And you guys are probably like, what the fuck is this? It's because I know from looking at this chart copiously that after this resistance, there is no resistance, even from 2021. That, oh, okay. There's no resistance even from 2021 until the all-time high level. So I would chop it a little before the all-time high and get some pretty good profits. So hopefully this trade is still available in about 10 minutes. But yeah, I mean, it's a proven, very tested, and very successful strategy that works fucking wonders. If there's one thing that you guys could take away from any of this, any of it, it would be to learn fibs and learn liquidity, because it will be your best friend, your actual best friend when it comes to trading. It'll always be there for you, and it'll get you some fucking filthy trades. Like, actually filthy trades. So, yeah, but don't trade every fib and liquidity. Don't trade every liquidity grab you see. That's the thing, because, like I said earlier, it doesn't work out all the time. It does have a high win rate, but it's also a very basic strategy. That's why what you want to do is start using other tools in tandem with it, like fixed range volume profiles, which I use a lot on stream. Um, and I'm pretty sure, I'm actually 100% sure, my next video is going to be on those. But using fibs, fixed range volume profiles, and fair value gaps together is basically god tier. You're going to get a fucking insane win rate, and you're going to be able to get some very good RR trades. But yeah, that's pretty much all I have to say about fibs and liquidity. It's a very simple concept. I just wanted to show you guys some examples of it, and you guys are going to see a lot more examples of it if you guys watch the streams, which I'm about to go live right now. So hope you guys enjoyed the video. Um, Questions, comments, feedback, put them in the Discord. You can private message them to me, or you could just put them in general. Yeah, I mean, I'm here to help you guys. This is for you guys. I'm actually gonna check my notes real quick and see if there is anything I missed. Oh, okay. Um, yeah. Using fibs, you also want to keep market structure in mind. Just because there's a liquidity grab, um, like right, um, right here, for an example, you can see that we have, this is just exactly what I was talking about of why market structure is so important. We have a high right here, a low, a lower high, a lower low, a lower high, a lower low, lower high, lower low, lower high, lower low, and then a liquidity grab. I wouldn't assume that that's just going to hit, because if you do take the fib from the low to the high, yeah, you have a golden pocket entry. Yeah, you would have hit the zero. Or actually, that, I mean, that would have hit. But um, it also, if you did have a greedy take profit, it would have hit your stop loss down here below the liquidity, which it did touch. So keep in mind, keep market structure in mind. Don't just forget about it when you're using fibs. You have to use everything together. That's why I recommend taking notes on all these videos and watching them over again to literally burn it into your brain, because you got to use all the strategies or all of the tools that you learn together as one. That is what's going to help you. And that's what's going to get you successful in trading. So, hope you guys enjoyed the video. Like I already said, questions, comments, feedback is much appreciated. It's time to go live, and more videos coming soon. Go make some money. Goodbye.